Why do we overpay electric utilities by billions of dollars every year? Because we're overpaying utility investors. Let's start by showing the bottom line, the 10-year return you get from investing in virtually risk-free U.S. Treasury bonds. Because the risk of losing money is low, you also don't expect a high return, meaning these bonds have what is called a low risk premium. For-profit utilities are only slightly riskier than U.S. Treasury bonds. Profits are basically guaranteed by the state regulators who manage the rates that these utilities charge customers for electricity. So we should expect a low risk premium for investments in utilities compared to U.S. Treasuries. In 1980, investors earned a modest $2 extra per $100 investment in utilities than if they'd invested in U.S. Treasuries. For the low risk, that premium was about right. But within a few years, the utility risk premium started getting out of hand. By 2015, utility investors were profiting $8 more for every $100 invested than if they'd been investors in U.S. Treasuries, even though regulators ensure that U.S. utilities are still a very safe bet. Experts estimate that U.S. customers overpay utilities billions of dollars per year due to this inflated risk premium. One former utility executive says electricity bills could drop by 10% if regulators cut utility returns in half without a major impact on their utilities' access to capital. Our electric bills are too high because utility investor returns are too high. Next time you hear about electric bills going up, ask how it's going for investors. To learn more about utility upcharges, check out additional resources from the Institute for Local Self-Reliance.